All right, guys. So I really wish someone told me this when I was into ICT trading back in the day, right? Now, first of all, when we talk about ICT, number one, Bitcoin has hit 100K plus. RIP ICT, he's always wrong. He's never right. Number two, his concepts don't mean shit in the eyes of Wall Street. So that's also there. So you guys are going behind the wrong, going behind the wrong shiny object or shiny set of concepts. But the only reason why the inverse fair value gap works is because it shows you areas in price that worked before and then it stopped working. Okay, so that means there's some kind of an inversion going on, meaning there was some liquidations that happen, which causes this new price level to be a brick wall, a ceiling, or a ground. All right. So I'm gonna keep this extremely simple, right? So as I mentioned in the public Telegram group, I was going to do a video about inverse fair value gaps because that is something that I use heavily as well. All right. Because it is institutionally backed, it is also statistically backed. All right. Now, what is an inverse fair value gap? An inverse fair value gap is basically when, let's take a bullish one, for example, when price goes down and it forms a gap. Okay. And now in this gap, price reacts from it. Doesn't even have to go down again. As long as there's a reaction, it can go like this. Okay. And then when price trades above it and closes above the inverse gap, like so, that is your bullish. I'm sorry. When price closes above the bearish fair value gap, it becomes a bullish inverse gap. Yeah. Then when you have an example that price is going up like this, and then it reacts and it fails and does this, then this is a bearish inverse gap. Okay, bearish inverse gap. It is as simple as that. So that is a inverse gap. It is as simple as that. Now, if you take a look at some examples in price, okay, take a look at some examples in price to see exactly what is an inverse gap. All right. And then we'll get to what is the correct inverse gap and how to choose the correct inverse gap. So an inverse gap, let's say, is this. You see, a bearish fair value gap that price trades through, uses as support and goes higher. It's as simple as that. So what about a bearish one? So a bearish scenario is going to be this. Now see, can you see this gap here? There. Can you see how price made wicks? It doesn't have to give a bullish reaction. It has to show some form of reaction, like a wick there. Then when price closes below it, like so, or like here, is going to be using that as your natural resistance point to trade lower. Okay, that is the bullish inverse gap over here that I showed you, and now this is the bearish inverse gap. Then that brings me to the next topic, which is how to choose the correct inverse fair value gap. Okay, now listen closely. Yeah, a correct inverse fair value gap is this: the first inverse gap that forms in a buy or sell program. So meaning in an expansion up or in an expansion down, the first gap that forms is the first inverse gap that forms is the inverse fair value gap. So Sean, how? How to see this? Okay, look closely now. Here, this is a redelivered rebalance, which is also a gap, right? Now, see this how price goes, reacts, comes down and fails, right? And see how price never closed above the redelivered rebalance until this candle. So this is untapped. That is your first inverse fair value gap. Not this, not this. No, it's this, the first one. Okay. Likewise, over here in this run up, right? See how price reacts, goes up and goes down. So if you had to choose between this and this, you are choosing the first one. So after the first one gets mitigated only, you can worry about the second one. I hope that made sense. Okay, after the first one gets mitigated, you can worry about the second one. So if you take a look at yesterday, Bitcoin. So Bitcoin, I was in a buy over here. Now some complex one-on-one shit, so don't ask me, but I'll show you based on the context of what we're talking about today. Okay, see, now take a look at this. What can we see? We can see that here we have a redelivered rebalance. Sean, it is true that this is a redelivered rebalance, but it reacted down. Yeah, that's what we're looking for. Reacted down, close above, come into it. That is your inverse gap. See? Then, as we are moving higher, then price has to refer to other inversions, right? Okay. Now see, where's the next inversion here? Why is this an inversion? Because look, we go react down, up, and then we continue, right? Now, when I use an inverse gap, when I use a gap, I don't only use the high and the low here, this high and this low. No, I use the entire candle, like so, like this. I use the entire candle, okay? You can see it uses that and goes higher. Now, because this has been used up, now we know that there's nothing else that can be used over here. So let's go to the next one. Here. Like so. Now what? We close through and we never come. In fact, it just runs like a mad dog. Poof. Simple as that. So it gave you your entry here. It gave you entry here. Okay. Right. So now here, how do we know? Come here. How do we know when the correct inverse fair value gap has formed or not? Whether it has formed or not. How do we know that? Because it can react and it can fail, right? That has something to do with the idea of this. See, let me use my pen over here. See how we have this low, we have this low, right? And we have this one here. Okay, so this is a rejection block. And here we don't have any gap. So we go to the next one here. See that? So if this has no gap, then there is no first inverse fair value gap. So then price reacts, and when it closes over here, this becomes the first inverse fair value gap, and that is what price uses to go down. This is a reoccurring phenomenon that works every single day, no matter what. Literally every single day. The only thing that you have to do is you have to wait until price does the inversion. If you don't wait, if you can't wait, it's going to be a bit difficult. Literally going to be a bit difficult. Now, if you look at Bitcoin now, that's the asset of interest during NFP week. Now, let's take a look. Right now, Bitcoin is useless because it hasn't taken the Asian high. It has done nothing really. So, removing all that from our context, what is the inverse fair value gap over here? Well, right now we have, let's see, this. Why this? Look, because this down close, it wicked, then went down. That could be an area that we are interested in. But now we are bullish Bitcoin, right? So for being a bull on Bitcoin, what's the inverse fair value gap down here, right? It is this one. Why this one? Because reaction failed. So come down, go. Now we are only looking at one time frame. Yeah, sometimes it can just go like that without even hitting this. Why is that? Because we are missing the higher time frame. Go to the 15. On the 15, what do we have? On the 15, we have the similar. It's the same. It's the same. Okay, but it's very, very, very small. In fact, it's not there. Sorry, it's not there. So the 5 minute we have it, on the 15 minute we don't. So on the 15 minute chart, if we go and do this, because this is the next IFPG on the 15, right? If we go and do this, then we know that it's going to be stuck here and then it's going to go up. So on the 5 minute setup, the 5 minute setup is come here and go. The 15 minute setup is come here and then go. It is as simple as that. If you can learn to compartmentalize your time frames, nothing will get confusing. Okay. So that's pretty much it. I showed you guys how to use inverse fair value gaps, how I use inverse fair value gaps, and how you can use it in concert with the sequence, with my algorithms if you are in the Trade Easy Algo group. Now the Trade Easy Algo group, the Black Friday deal is done. No more. The only thing that's left is the monthly sub and also the lifetime offer, which runs at $400. until January 2025. If you can get it before January 2025, you have access to every single thing, including my analysis, the premium chat, and also my occasional trade callouts. With that said, I'll see you in the next one. And before I go, the premium chat, I talk more in depth about the primary and secondary sequence when I have time. So with that said, I'll see you in the next one. Good luck and good trading. Bye bye.